I have been investing $15 every single day into Vanguard's VOO for 150 days. And this is probably my craziest update yet. This is my third check-in video with this strategy. I did the first one on day 50 when the position was up about 3%. Then I did a follow-up video on day 100, and unfortunately the market decided to plummet, meaning that I was now down 2.7% on my position. But now, the market has been quite a roller coaster, which brings us to day 150, where I want to show you my results. But first, let's remember why I started this. When I started this experiment, I wanted to automate my investing strategy by using something that could snowball over the long term. This sounds a bit too good to be true, but historically the S&P 500 has returned 10% per year on average. So by investing $15 per day, which works out to about $350 per month, this compounding could turn into something really life-changing over the next 30 or even 40 years. The big question here is how much? Well, if we take a simple compound interest calculator such as this one by DripCalc, and we use VOO's historical returns to simulate the results, after 30 years you would have a holding worth about $1.5 million. And if you have a little more time on your side after 40 years, it looks like it could grow closer to $5 million. Okay, now that's awesome, but the next question I get asked is how am I actually going to do this? So VOO is an ETF that tracks the S&P 500 index. There's several ETFs that track it, but this is the one that I chose. If you didn't know, the S&P 500 is a basket of 500 companies, all of which are top companies within the USA. There's tons of names you might recognize like Apple, Microsoft, Nvidia, Amazon, and many more. So by buying this ETF, I'm getting access to all of these 500 companies in one spot. Okay, but what about brokerage fees? For me, my platform actually doesn't charge anything per trade, so I'm able to set up recurring daily purchase orders without being swarmed with additional fees. Now, the next question is why daily? I've always been skeptical about market conditions, and dollar cost averaging is one way to take the emotion out of investing. Daily might be a bit much, but in the good spirit of experiments, I wanted to try it out. Now let's get to the fun part. How is my position actually doing? I think it's important we first look at the dollar cost average and how it's changed over time. So let's start with the day 50 update. At this time, I had invested around $690 of my own money, and it was up around 3.35%. The average price for my shares was around $534.36. Now fast forward to day 100, and the position had reached a total value of $1,545. But now I was actually down 2.7% during this update. And the dollar cost average, this had increased to $543. Now since then, VOO has been all over the place. In the last 6 months alone, we have seen it hit a high as much as $560 per share, but as well as a low at $450 per share. Lucky for me, I have been loading up on shares this entire time using this daily strategy. And that brings us to my position today. So I have spent $2,272 on my shares with an average price of $532 per share. This is actually lower than my last two updates. Now this makes my total return about 2.27%, which is $51. And since the market had dipped so heavily, this is why my cost average actually got better over time. So it's quite an interesting thing to think about when you consider all of the volatility that we've seen. Now at the time of recording this, VOO is currently trading around $544 per share, but with how volatile things are in the market, I wouldn't be surprised if that changed by the time I got a chance to post this. Something I often wonder is what if I lump summed the current value of my investment 150 days ago? How would it have performed? When I made that first purchase, VOO was actually trading around $525 per share. So if I was able to lump sum at that time, I would have actually been up right now during this update. However, the idea behind dollar cost averaging is that I didn't have the $2,000 ready to invest at that time. time. The $15 a day makes it a smaller, more achievable amount, especially when you spread this out across the span of months. But focusing on my initial question, yes, I would have been better off lump summing if I had this money available in this case. Now, if you did enjoy this video and you want to see more updates on my $15 per day experiment, hit that subscribe button. And also be sure to leave a like as I keep experimenting with this account. Remember, this video is not financial advice. I am just reflecting on my own personal experience. With that, thanks for watching.